Good evening. This is the Post-Market Recap by AGI Era. Today is Thursday, January 8th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a market grappling with underlying macro currents, leading to a mixed close across the major indices. The S&P 500 finished the day up 0.01%, settling at 6921.46. Technically, the index managed to hold just above its previous close, indicating a tenuous grip by the bulls at this elevated level. The Nasdaq 100 retreated, closing 0.7% lower at 25507.1. This underperformance highlights a selective approach to growth names today. The Dow Jones Industrial Average finished higher by 0.55%, adding a respectable 270 points to close at 49266.11. Crucially, trading volume today for the S&P 500 was slightly elevated at approximately 2.31 billion shares, compared to an average of around 2.27 billion. This implies that while the S&P's move was marginal, there was a touch more conviction behind the day's trading, suggesting active positioning rather than mere apathy. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 15.44, a modest increase of 0.39% from its previous close. Despite the mixed market performance, the VIX remains subdued, suggesting this is a controlled rotation and sector-specific reevaluation rather than widespread panic or a significant shift in broader market sentiment. We are seeing a clear divergence in sector performance. Money flowed noticeably into utilities XLU, which saw a gain of 0.29%, while technology XLK lagged significantly, dropping 1.56%. This rotation indicates that Wall Street is positioning for a more defensive stance, favoring stability and yield in a potentially uncertain growth environment and pulling back from some of the higher beta tech names. The macro engine room. The primary driver of today's moves can be traced back to the bond market and the anticipation of key economic data. The 10-year Treasury yield settled at 4.18%, rising on the day from its previous close of 4.138%. This move is significant because rising long-term yields directly increase borrowing costs across the economy, creating a headwind for growth-oriented sectors and putting renewed pressure on mortgage-sensitive areas. The uptick today is largely attributed to signs of resilience in the labor market, easing fears of a sharp economic slowdown, and potentially influencing the Federal Reserve's future policy path. Meanwhile, the U.S. dollar index is up 0.25%, reflecting its safe haven appeal and potentially strengthening ahead of tomorrow's critical jobs report. Crude oil is trading around $58.63 a barrel, up 4.71% on the day, responding to ongoing supply dynamics and a generally positive, albeit cautious, global demand outlook. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech. The Magnificent Seven showed a mixed bag today, indicating a more discerning approach from investors. Nvidia finished the day down 2.17% at 185. Microsoft closed down 1.11%, while Apple declined 0.49%. Meta also saw a slight dip, closing down 0.41%. However, it wasn't a universal retreat. Alphabet posted a solid gain of 1.07%. Amazon climbed 1.96%, and Tesla advanced 1.02%. The weakness in some of these tech giants is notable, suggesting that after a period of robust gains, investors are becoming more selective, potentially rotating out of names that have run hard or those perceived to be more sensitive to rising interest rates. After hours and look ahead. Looking at the after hours tape right now, we are seeing some interesting movements, particularly in the defense sector. Shares of L3 Harris Technologies LHX are moving significantly higher, up over 6.80%, alongside other defense contractors like Lockheed Martin and Northrop Grumman. This could be indicative of new contract announcements or shifting geopolitical sentiment. As we pivot to tomorrow, the calendar brings us the highly anticipated US Non-Farm Payrolls report. Investors should specifically watch the headline job creation number and wage growth figures, as these will be critical in shaping expectations for the Federal Reserve's monetary policy and the trajectory of interest rates for the coming months. A stronger than expected report could further fuel bond yield increases, while a softer print might offer some relief to growth stocks. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.